Hello and welcome to Business Today. You're watching our continuing coverage from Davos 2025, and I have with me Mr. Tapan Singhel, the Managing Director and Chief Executive Officer of Bajaj Allianz General Insurance. He's also on the Governors Council of the World Economic Forum. Welcome. This is a time when most of the world is looking at a new president taking office in the United States of America, and this is obviously going to be a seminal event for global trade. But I want to begin by getting a sense from you of the overall outlook that you have for 2025 as far as the insurance sector is concerned, because we are doing this conversation in the run-up to various disruptions, and the most recent one has been the California wildfire, which must have upended the insurance industry in that part. So how is the 2025 outlook looking to you?
So I do not know, Siddharth, if you have seen some video clips going of some famous movie stars not being showed.
Yeah.
And there are houses being worth $40 million and $50 million. And some of them actually had taken a loan for that. I think the issue with insurance is that it provides a huge societal need. It serves a huge societal need in terms of taking care of when things go wrong. But mostly when things are right, people are not worried about it. And that is a scenario when in US you have 95% penetration of home insurance. It's 95%. India is less than 1%. You can imagine when you have catastrophic losses, how many people, their life savings go down the drain. And somebody at 60, 65, it gets very difficult to again rebuild the whole thing. I've always believed that insurance plays a vital role in society, and insurance along with government, it's a combination of two, can serve the societal needs in a manner which makes sense. So let's take the case of motor insurance. We are aware that in India motor insurance is mandatory, the third party insurance. We also see that if an accident happens due to a motor vehicle, the compensation paid to the victim is commensurate to the loss of livelihood or the
income loss.
But let us say if the same happens with an aircraft, then it's just about 5 lakhs or something, or a railway, or something. You see the difference in terms of the compensation and the way you look at the SME, MSME in India. It's highly underpenetrated again. The impact of that is that when you have a Uttarakhand flood or a Sikkim flood, those budding entrepreneurs who had dreams of becoming the next big industrial businessmen of India, they go bankrupt. So it serves a very powerful purpose. But the human brain, the way it is wired, they don't look at insurance as something very necessary.
But to those very people, since you spoke about how big movie stars didn't have insurance, home insurance in California, when we would talk to these people in India where penetration is low, they would say, they don't have it, so why are you forcing us? What is the trade-off really?
There's no need to force anybody. I think the trade-off is the realization that, let us say, if you have worked for 20, 30 years, you build a house and the content in the house, it takes a lot of years of hard work, labor in building things together to be there, your dream house. And depending on how much money you have, your dream house would be, as well. It will be a substantial portion of your wealth creation which you have done. Now, let's say one evening, because of some reason, it gets destroyed. And you have reached like 60, 70. Can you again work that hard to build it up again? If not, it's a question of dignity. And what does it cost? It costs just a cost of a meal with your friends. That's the only cost which is there.
So when a home buyer, a new one, takes a home loan,
yes,
what is the consumer behavior that perhaps prevents him from taking insurance for that asset alongside?
I would put it like this, Siddharth. It's a question of conversation. Let's say if somebody has a conversation, the person will take it. Because what does it cost you? About 300 rupees for a cover of more than 1 lakh of rupees? It's insignificant to the amount of money you spend on interest on the loan or the money you spend in trying to buy the property. The cost of insurance is insignificant. So somebody has to show that is insignificant, and something goes wrong and you have taken a loan, and the loan is a substantial part of your earning when you're buying a house for the first time. then how do you repay that?
So is there a lack of a regulatory push? Is policy not supporting it? What keeps us?
So I would say, let's say, US is mandatory that you have a cover, no, which you provide for at least the flood, earthquake part of it when you are taking a house. That's why I say it's government and insurance companies working together. I'll give you a classic case. Health insurance is amazing. So government came out with Ayushman Bharat. No? Now you look at the cost of an Ayushman Bharat for a family, a floater policy for a family of a sum insured of 5 lakh. It will cost around 2,000 to 3,000 rupees a year. No? And the same policy when you take, on a regular retail basis, the cost would touch about 15,000 or so, which is there. So when you have mass coverages, the cost comes down substantially. The affordability comes down substantially. When you have selected coverage, the cost moves up. And that is why when you want to make insurance affordable and accessible, so let's say somebody tells you to buy insurance of 2,000-3,000 for a family and the cost is just this much for 5 lakhs and you can buy it for all your helps and everybody and can be linked into the government scheme, would you say no? It's costing you less than 170 rupees a month. It's insignificant to the expenses that you're doing. If something goes wrong in that family, for them is a question of life and death. For them is a question of dignity. For them is a question of that. No? So I think the seriousness of figuring this out, that the purpose of insurance is societal good and the collaboration of the government and the insurance industry together in solving issues, like I mentioned about the SME, MSME issue or the health for all. And I mentioned this before also, about 10 crore Indians every year go below poverty line because they could not afford the health coverage which is there. Or the issue of trying to look at now the global warming happening. The loss of income for labor on the street in a hot summer time when the temperature goes up. There can be a coverage that temperature exceeds a certain amount of degrees. They get a compensation on the daily basis. So things can be worked out together and it can be solved in a way which is very accessible and affordable. I think it's just a question of getting people together at the table and solving it together.
One quick point before we move on to some broader topics, and this is to do with the increase in premium we also get feedback when we do a story. There are people who are logging in and saying, but you have not picked up the point that premiums have gone up, health premiums have gone up. What is the IRDA doing? The industry is just jacking up prices. Why is this happening?
That's a very, very good question, Siddharth. So let's understand how does insurance work. I think that will solve a lot of these questions. Insurance is a very simple business. See, it collects money from many to pay to a few. That is all it does. No. So let us say if the money collected is 100 and the payment is 100 plus expenses and the manual expenses, and then things are fine. If the money collected is 100 and the payment and all the outgo becomes 120, then 20 has to be again got by money collected from many. That is how this principle works. If let's say the claims and outgo falls to 70-60, then the premium will drop because the market forces will determine how it goes. Now let's look at, because this question mostly comes with the health portfolio. If you look at the health portfolio, the total outgo for the industry in the health portfolio for the retail health is about 180 to 120%. Which means that for every 100 rupees, the industry is losing 20 rupees on underwriting basis. That is how it would be. Now, why does it happen? You have medical inflation happening. Hospitals, we have been saying that there should be a relative of hospitals. You look at the cost of treatment, let's say 5 years back to what it is today.
Absolutely.
Now,
and post-COVID, there's been you know it very well.
Very
big spike.
25-35% hike has happened in the medical inflation. Then again, one of our demands with the government has been GST. You have to pay 18% GST, which goes as tax to the
I remember discussing this exactly. 3 Davos ago here. That was the summer Davos.
Exactly.
But the council doesn't seem to have made up its mind, the GST council. Are you at all hopeful that something would happen?
Let me first answer this question of yours, because this actually is very interesting for customers to understand this. So now if the health cost goes up, what hospitals are charging, and then if your cost of, then the premium will move up. If it comes down, the premium will come down. Let me remind the customers, till 2007, the prices was fixed. It was a tariff regime. In 2007, the regulator allowed free pricing to happen. The only price today controlled is the motor third party, which is again controlled by the government. And the industry loses money because obviously it's mandatory, so it's controlled by the government. Minus that, the price is not controlled, which means the market forces will determine how the prices move up. The motor average price of motor business, it fell down by about 40 to 50% on the own damage part. The fire portfolio fell down by 50-60%. No, it came down. The health movement is happening because of the reasons that I mentioned to you. So everybody has chipped in. The government has chipped in terms of the GST. They should be looking at lowering down. There should be a regulator for hospital. They should chip in and bring in more transparency. The insurance industry should bring in more transparency in terms of the customer be aware how the things are moving. And that is where the claim exchange being set up with the help of government and the industry plugging in. I think would be a very big step in that direction. But obviously, all this put together causes the premium to get high. So if it comes down, the premium will also come down. It is a moving target. It is not something which just keeps on moving up. I've seen premium comes down also.
When the internet came and after that we saw the whole thing about online insurance, and practically can get an insurance within 5 minutes today. I'm not linking the question to that, but the great technology revolution centered around generative AI that is underway. How is that playing out in your view as a CEO of a large company, and what kind of impact do you see it having on businesses across the board?
Technology has always excited me. I've always felt technology as something which is such a powerful tool that you can use it for enhancing customer experience or coming out with innovation at a very different level. I have to remind you, Siddharth, I don't know if you had a motor claim before 2001. I don't know if you had one. It would take you about 3-4 months to get a claim. It's unimaginable. Just about 23-24 years back.
I don't even know whether it was cashless those days.
No, there's no cashless. So you actually had to carry the motor parts to your insurance company branch, and they would actually tick with the photograph and see that all the parts have been submitted before they paid a claim. It was like 3-4 months, and that is it. Now, if you look at because technology advancements, cashless happen. Today, companies are saying that if an accident happens, you click pictures on the spot, upload it, and money gets transferred to you within 10 minutes time, 15 minutes time. All the machine learning is happening on that. Now look at generative AI. It is completely mind blowing. And just do an experiment when anybody's watching this, or you can do it yourself. Upload any accidented car photograph in Chat GPT or Gemini, and ask them what is the assessment of loss. It actually gives you right now, and what parts are damaged, and also ask them in the city that you're in, where can you repair it and what will the cost to repair. It'll give it to you. So can you imagine something the insurance industry was building in by machine learning over time? Generative AI is a massive database that they have, is able to throw out estimates of that. And I've also used it in terms of a conversational tool. Let's say you want to learn about any complex insurance, surety bond or something. You ask the question, it answers so beautifully. So you put together underwriting, claims, conversational tool, learning mechanism, chatbots, call centers. It would transform the whole industry completely in the way you see the industry today. Like you said, internet coming in, now you have 3 clicks, 4 clicks purchase of policy, you have claims happening on the spot. Generative AI is going to take to a stage where you can actually have an insurance company, a whole company run with just 50, 100 people.
And how is the Indian insurance industry, both the private and the public sector companies sort of preparing for this shift?
The beauty of technology and the beauty of innovation is, Siddharth, when somebody starts the ball rolling, others also get to the game, because the differentiator happens to a level that you can't miss out. So one, if as a person in industry, what I would miss out is that if you innovate, in 3-4 months, everybody else also would copy that, which manufacturing may take most of the time. But the happiness it gives me, it changes the complete customer experience at a very different level. I remember those times also before 2000, when for travel policy, an agent would come or somebody would come, and the office would be closing, and they would be worried they would travel and they would not know how to get it done. It was mandatory to have a policy. And today's time, when you just scan the boarding pass and your passport, and you click and your policy gets issued. The next phase is going to be more interesting, more transformative than you imagine.
Okay. As we wind down the conversation, I want to ask you, in your interactions with CEOs here at Davos, what are the next big thing that they are looking forward to? What's the buzz this time? Of course, the theme is the intelligent age, but what would you tell our viewers?
There are 3 things which is the top of mind for most people that I meet. And I'm sure that when I mention 3, and if you give me a 4th, I'll be very happy. The first is the geopolitical risk. I think most people have this feeling that the world has become unsafer than what it was earlier, and they don't see it becoming safer. That is the first thing. The second, if you look at, is this global warming. It is no more something that you can ignore. You are having fires, you're having floods, you're having natural catastrophe happening. Is enough being done? I think people are not very sure as to what exactly tangibly it means, though you have ESG, but you're not sure how it is going up and what exactly impact. And third is generative AI. Some people are excited about it, some people are afraid about it. No, some people are thinking of regulating it, some people are thinking it will go out of control. And now you have this quantum computing coming in, and you have those chips coming in, and the multiplayer happening at a huge fold. In fact, the prediction is in a couple of years' time, you'll have unicorns created by single individuals now, no? Companies, no? So that kind of power is coming to at individual level on plus and minus. So these are three big things if you speak to anybody. It will be in these three buckets that the conversation would typically be happening. So,
viewers, I learned a new thing today in this conversation, that there can be single person unicorns. I had heard of one person companies, and that was there's a legal framework for that, but I had not heard of a unicorn that would possibly be set up and run by one person. But the point that Tapan Singhel here is making is that technology will allow for such a level of intermediation that perhaps the level of human involvement will be very limited. So it's not just augmenting the humans, it's perhaps also replacing humans to a large extent.
So this reminds me of whether I have walked this earth a bit before you, Siddharth. I've seen many cycles of this conversation. The first I remember was when computers came in for the first time.
Yeah, and we had the union strikes all over.
Exactly, that's Siddharth. And people felt that jobs would be gone. So I asked a lot of people this question, that whose job went at that time? And we actually think the only person who lost their job was stenographers. Before that era, you had stenographers.
Because everyone started typing as a result, eventually.
And you had stenographers. That is gone. But the typist who learned a bit of computers actually started earning 10 times more than what he or she was earning as a typist. So jobs get created. It is how you keep on transforming yourself is the question. Jobs never get lost. I think that's the beauty of over times I've seen every cycle has created more exciting jobs, and people who have been able to take that curve really moved very fast. Those who did not, some segment of that, yes, they do lose their job.
We started with a conversation focused on the insurance sector, but one of India's largest risk managers has ended this conversation with advice on managing risk in your career. Keep retooling yourself, reskilling, and that's how perhaps you can continue to remain relevant. Tapan, thank you very much for that.
Always
I'm sure
my pleasure.
a lot of our viewers will appreciate those words of wisdom. With that, it's a wrap on this conversation. We'll continue with our Davos focus. We'll be back. Until then, goodbye.